Our topic for today is tax incentives. Okay, let's look at introduction. Malaysia offers various tax incentives to promote investment in selected sectors. Okay, most of the incentives are offered to manufacturing and also agricultural sectors, but there are also other sectors that receive tax incentives. For example, Islamic financial services, ICT education, tourism, healthcare, and R&D. So there are many forms of the incentives. Some of them you have learned before on the double deduction, okay, accelerated capital allowance, or special deduction under Section 34. These are also tax incentives. Okay, but the one that we are going to look at in this chapter are the three major tax incentives in Malaysia, which are pioneer status, investment tax allowance, and reinvestment allowance. Okay, I'm going to cover pioneer status with you. Investment tax allowance and reinvestment allowance will be covered by Dr. Khadijah. The first two, pioneer status and investment tax allowance, are granted under Promotion of Investment Act. Okay, but still, this will result in lower income tax payable for companies. Number three, reinvestment allowance. This is under Income Tax Act 1967. All these tax incentives are mutually exclusive, which means that a company can only enjoy one tax incentive at a time. Let's say a company is already enjoying pioneer status, and then they want to change the investment tax allowance. They have to surrender the pioneer status first. Pioneer status and investment tax allowance are generally targeting the same group of companies. These are companies that just started investment, but they must participate in this promoted activity or promoted product. Okay, there's a long list of promoted activity, promoted product that's produced by MIDA. So for these two, pioneer status and investment tax allowance application is made to MIDA, Malaysian Investment Development Authority, not by Inland Revenue Board. RRB will just accommodate in the calculation of lower income tax payable, but application and monitoring will be done by MIDA. Okay, as for investment allowance, as the name given, reinvestment, this is for companies that are already in business, but they invest further to expand or modernize or improve their existing business. For a detailed list of promoted activities and promoted products, you can go to MIDA website. Okay, it's all listed here. There are 5 appendix you can download in PDF. So this is example of the general list. The list is very long. I don't expect you to know this, but if you really want to know, you can go to the website. Okay, let's look at the first tax incentives, pioneer status. Okay, so the pioneer period, that means the duration of the tax incentive, the standard tax relief period given is 5 years, begins on production day as stated in the pioneer certificate. 5 years means 60 months. Okay, so it's date to date, not year assessment to year assessment. So for example here, production day was determined at 1st October 2015, so it's 5 years from 1st October 2015. Okay, so the period before the pioneer period is called the pre-pioneer period. Okay, and that means before 1st October 2015 here is considered as pre-pioneer, and the post-pioneer period is considered as just the period where the pioneer status period has ended. Okay, in this case, 5 years from 1st October 2015 is 30th September 2020. So after 30th September 2020, that is considered as post-pioneer period. Okay, so pre-pioneer period and post-pioneer period are considered as a separate non-pioneer business for the purpose of computation of chargeable income and income tax payable. Based on that example, since production day starts on 1st October 2015, so the period before 1st October 2015 is considered as a pre-pioneer period. So these 3 months are pre-pioneer period. So 5 years from 1st October 2015 is 30th September 2020. Okay, so 30th September 2020 is the last date where pioneer periods will end. So starting 1st October 2020, that will be considered as post-pioneer period. So for income tax computation for your assessment 2016, the first 3 months will become non-pioneer business. Starting 1st October, then it will become pioneer business. Okay, and 2017 until 2020, these are fully pioneer business. For 2021, the first 3 months will become pioneer business. And then starting in 1st October, you have to consider as a separate business, separate non-pioneer business. Company under pioneer status will enjoy tax incentive in the form of tax exemption based on statutory income, of which 70% of statutory income will be abated, which means that will be exempted from income tax, while 30% will be, only 30% will be taxable, but it is taxable as deemed total income. Okay, I will explain this later. Okay, the 70%, as it is abated, it is exempted from income tax. It can be credited to exempt income account to be used to pay exempt dividend. Okay, but before it can be credited to exempt income account, it has to be further reduced by first current year adjusted loss from non-pioneer business. Okay, and any unabsorbed loss brought forward from pioneer business. Okay, about the adjusted current year loss from non-pioneer business, usually any current year loss will be deducted from aggregate income. But in this case, if you have pioneer business, any adjusted loss from the non-pioneer business has to be deducted from the 70% exempted income first. If there is unutilized balance, then only you will deduct from the normal practice where you deduct from aggregate income. And with regard to unabsorbed loss brought forward from pioneer business, because incentives is given as a percentage of statutory income, when you have loss, that means that you will not get any profit exemption during the year. The loss will be carried forward to next year. So next year, if you have any income, that unabsorbed loss from the pioneer business will be deducted from the 70% of statutory income before it can be credited to exempt income account. Okay, so pioneer loss can only be set off against pioneer business. So it can only be deducted here from the amount credited to exempt income account. It cannot be deducted from the aggregate income as a normal practice. And any unabsorbed pioneer loss can be carried forward to post-pioneer period, but it has to be utilized within 7 consecutive years only. As for capital allowance, we apply the basic principle of capital allowance, whereby capital allowance is claimed if it is owned by the business at the end of the basis period. So in the assessment pioneer business comments, where you have pre-pioneer and pioneer period, you look at the end of the accounting period that it has become a pioneer business. Therefore, capital allowance will be claimed by pioneer business. Okay, so in the assessment pioneer business ceased, okay, you may have pioneer business and post-pioneer business. So you look at the end of the accounting period, the business has become post-pioneer, a non-pioneer. So it will be claimed by the post-pioneer business, not pioneer business. Any unabsorbed capital allowance, it can be carried forward to pioneer and post-pioneer business between these two periods. Okay, whether during commencement or you cease your pioneer status. In the calculation of statutory income of pioneer business, capital allowance is deemed claim. That means if you choose not to claim, you still have to claim because it will affect the calculation of statutory income. Okay, so you cannot purposely you don't want to claim because you want to increase your statutory income. Okay, because it is deemed claim. You like it or not, you have to claim. Okay, let's translate what we have covered in previous slides into calculation. Okay, step 1 here is to find statutory income for the pioneer business or promoted business. As usual, this is the normal step. You start with adjusted income, add balancing charge less capital allowance current year and brought forward to get the statutory income from pioneer business. Okay, let's say the question asks you to do for more than 1 year. It's better to do in column like this so that you can save time from writing all these items. Okay, for step 2, you have to calculate total income and deemed total income. Okay, calculation of total income as usual. If you have any statutory income from business, from the non-promoted business, okay, and then you minus any unabsorbed loss brought forward from the non-pioneer business. if you have investment income, section 4C, section 4D, any dividend, interest, rental, okay, you add here before you can get your aggregate income. So after aggregate income, you minus current year loss, okay. But this is the unutilized balance only because first you have to deduct from the 70% of statutory income before you can transfer to credit to exempt income account, okay. And then you deduct the donation or zakat, and then you get the total income. After you get the total income, you add deemed total income. This comes from the 30% statutory income from pioneer business. Okay, if you refer to the previous slides, 70% will be abated and exempted. The 30% will be taxable as deemed total income. So it is added after total income, okay, for you to get the chargeable income. Step 3 is to calculate amount transferred to exempt income account. Okay, you start with 70% of statutory income from the pioneer business, and then you have to reduce this amount by the current year loss from non-pioneer business and any pioneer loss brought forward for you to get the amount credited to exempt income account. Referring to previous slides, okay, the 70% will be abated, but would be before it can be credited to exempt income account, it must be further reduced by any adjusted loss from the non-pioneer business and any unabsorbed loss brought forward from pioneer business. So this is how you translate it into calculation. So there are two things that you need to find. Okay, first is the chargeable income for the pioneer company and the amount credited to exempt income account. Okay, so let's look at next slide about the exempt income account. The abated income, which means 70% of statutory income, would be credited to exempt income account used to pay exempt dividend. Okay, so this exempt income account will be used to pay exempt dividend. That means the dividend, the shareholders who receive the exempt dividends are exempted from paying income tax. For normal companies, dividend is exempted in the hand of the shareholders because tax has been paid by the company. Okay, so let's say the dividend is 1,000. Company will pay the shareholders only after deduction of tax 24%. That means only about 76%. Okay, because tax has been deducted. But in this case, if it's a pioneer status company, paid out of the exempt income account, that means the shareholders will receive the whole amount of 1,000. Exempt income can be used to pay two-tier exempt dividend. Okay, two-tier exempt dividend means it can be used to pay exempt dividends 2 times only. Okay, example here for pioneer company, because they enjoy the exempt income from pioneer status, that amount is credited to exempt income account, so they can pay exempt dividend to its shareholder. Okay, let's say now shareholder 1 enjoy the exempt dividend. So because the it's exempted income, shareholder 1 can transfer to its exempt income account and use it to pay exempt dividend again. Okay, so shareholder 1 can pay exempt dividend to shareholder 2. Let's say shareholder 2 is also a company and want to pay dividend. But although shareholder 2 enjoy the exempt dividend, but because that has been used to pay exempt dividend 2 times. Okay, so shareholder 2 cannot use that to pay exempt dividend anymore. Okay, so no exempt dividend for any on payment of dividend from shareholder 2 to shareholder 3 because you have fulfilled the 2 tier here. Okay, next slide on categories. Okay, the normal pioneer status incentive is 70% exemption of statutory income for 5 years. Okay, but you can see the variation here. Okay, so normal pioneer status, 70% of statutory income will be exempted. Number of years is 5. But there are cases where you can get up to 100%. You may also get up to 10 years depending on the categories. Okay, last part here on others, because a company can only enjoy one tax incentive at a time. Okay, remember all the tax incentives are mutually exclusive. So you need to understand when pioneer status is beneficial for a company. So for good tax planning, make sure the company have this before they want to apply for pioneer status. Okay, projected profit during the pioneer period, because pioneer status is given out of a percentage of statutory income. If the company is making losses, okay, basically the company will not benefit anything from pioneer status. Okay, so make sure you can project your profit properly and there will be no losses throughout the 5 years pioneer period. If the company has non-pioneer business, the non-pioneer business should not be suffering any losses, because remember, any current year loss from non-pioneer business will be deducted from the 70% of statutory income before you can credit to exempt income account. Okay, so you cannot maximize the amount credited to exempt income account if the non-pioneer business is covering losses. Okay, and it should not be capital intensive, because capital intensive company will have high capital allowance. When capital allowance is high, statutory income will be low, and as a result, the company cannot maximize the amount credited to exempt income account. Okay, and the next point here, I think I have explained this earlier. If a company, because all the tax incentives are mutually exclusive, so if company wishes to apply for other tax incentive, investment tax allowance or reinvestment allowance, it has to surrender the pioneer status.